Hey guys, Mike here. So, oh boy, what an interesting day in the market today. Has some mega red and recovered after lunch. Just imagine that, trying to do those V-shaped recoveries. But again, we're going to go into why this happened. Okay, we had a big shift in something today, which no surprise, wink, wink, that that's happening. Plus, I'm going to show you the latest interview Tom Lee put out yesterday after the market closed with two predictions. One, which will probably stun you like it stunned the host, but we shouldn't be surprised, of course. But again, you know, he's got a bold prediction, but he had a bold prediction last year as well. So we'll see, does he finally get leprosy like Mike Wilson, or does he continue to ride the hot hand? If it does come true, a lot of people will be very, very happy. I will say that. For sure. And then we'll go into some charts and everything, and I'll show you again why Chinese stocks are absolute hot garbage and continue to sell off. Now, as I said, in the morning news brief, what's happening now, you see, one, you got VIX options expiration day called VIXpiration. I've talked about this before in detail, and most time it's just red, either that day, the preceding couple of days, as of the last year and a half. And, what's happening here is it kind of frees the market up to move, but also another reason you're seeing this, as I put in here, small cap and some other stocks are going down pretty heavily, is because the market is trying to reprice in less rate cuts, right? So what happened today? Now all of a sudden, it's not just us. You got the UK who reported a surprise acceleration in inflation, the first in almost a year. Within minutes of the release, the market had moved to price in just 4 quarter-point Bank of England reductions this year, down for as many as 6 last month. Does that sound familiar? That's kind of what's been going on here. And again, what else is happening here? You got the Fed presidents. They're out there talking, right? So they're saying, oh, I don't think we're in any hurry to cut rates or anything, trying to get this enthusiasm out of the market. And you saw today what happened. Last time I showed you this was just a couple of days ago. It was like 74%, which I was stunned to see. And all of a sudden, oh, wait, now it's 55%, still above half. But you saw this increase quite a bit. Now it's 43% saying, well, maybe in March, they're going to leave it the same. And so this is what I've been saying about recessions or rate cuts. Like they're going to say, this is what we're pricing in, wink, wink. And if they're wrong, right, then they'll just sell the market back down to readjust to where they feel like they can bounce from, say, okay, now we're good, right? That's kind of how it works. And it's all about just liquidity grabs. Liquidity grabs up, liquidity grabs down, all that good stuff, right? Because if there's not going to be those rate cuts, all of a sudden that's not QE. That's not liquidity, okay? No different if the Fed comes out and says, we're going to slow down the rolling off our balance sheet or stop it. You will see the market rally on that news because it's like, oh, that's great. Woohoo, wonderful. That's less bonds out there hitting the market and things like that. That puts less stress on the bond market and stuff. So the market might see that and go, that's wonderful. Any kind of hints of any kind of liquidity of any kind, the market loves to rally on. And so, and again, the worst case scenario, they're wrong. They just sell it back down. Now, we're kind of stuck in a rock and a hard place. I'll show you like a couple indicators. Some of this is from Bank of America, and you can see when I say right in a hard place, I mean, it's really, you're not at extreme greed anymore. And you can see this right here. This is their bull bear indicator. And they got a couple different ones. They're at 5.4, so you're basically stuck in the middle, right, between a buy and a sell. When it's really low, you want to buy. When it's really high, you want to sell. Well, of course, February 21, that was when the Q sold off. That was 7.7. You don't want to be getting in at that point in time, Then you got another one over here. This is where all the component readings are in and the sentiment and stuff, which drives markets, right? And just look at the equity market breadth, 81%, very bullish. Everything's pretty much bullish, right? And so that's usually not when you want to be trying to open new longs. And this one really shows you're basically dead in the middle right here, right? Of the bull and bear indicator, where the bulls and bears are having a tug of war here. That's what I mean by in the middle. And when you're at the extreme bull level, that's when you do not want to be buying. And when you're at the extreme bear level, you want to be piling in, and we're stuck right dead in the middle right now. And when you look at even the fear and greed indexes, the one which shows, the stock, how many percentage of stocks are above their 6-month moving average, still in an uptrend, still 75, which is extreme greed. But the CNN fear and greed index, which most people use, is now in greed, just at 69. Anything 75 or above is extreme greed. So we just came out of it. And you can see percentages of stocks above their 200 moving average. Still high on the NASDAQ 100 and S&P, not quite as high on the Russell anymore. That one obviously has had a major drop since the S&P. Now it started to outperform it because of the Mag 7 all of a sudden being rolled back into, which I'll actually show you a chart later on that one as well. Now that leads us into Tom Lee's interview, and I cut the basically, I cut this way down for you guys to get to the main points like I always do because your time is valuable. And the first part, pay very close attention to.
I'm still optimistic for the year, but in the first half, and we got a glimpse of that today with Fed governors talking about not sure how many cuts they want to do. That's going to make markets nervous. And we got a pretty lousy Empire survey reading today, a regional PMI, and that's going to get people worried about a soft landing or hard landing. Those don't get answered for the next 6 months. So I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
You do remain bullish, 5,200, correct?
Yes.
On the S&P is your price target for the year. That is not changing.
Yeah, I think investors who are long-term oriented should really just ignore the first 6 months. We have a Fed that's going to be shifting from being really tight to accommodative. Earnings are recovering. We've got interest rates coming down. That's great news for consumers. And I think businesses in general have a CapEx cycle ahead. So, the stock market should do well this year. It's just, it doesn't mean it's a straight up.
Well, that's about a 9% gain from where we are now. If you are also correct in that the market tumbles a little bit in the next couple of months, we all know it takes a bigger gain to get back to where you were after a drop because of something called math. So it's going to take maybe a 15% jump from the trough to get to that 5,200.
Yes, Brian, that's right. I think there's a chance at some point this year, maybe it's June, you have a chance to make 20% between now and year end. And I think small caps could make a bigger move, 50 or 60%. So I think there's still...
What?
Yeah, I think the IWM could end the year, Russell 2000 could end above 3,000. And small caps relative to S&P on a price to book basis, back to where they were in 99. That was a launch point for 12 years of gain. So yeah, I'd agree with you. I think the calculus is favorable for small caps.
Repeat that. Small caps, price to book, 99?
Relative to the S&P 500 is back to where it was in 1999, which was the absolute low and was a launch point, 12 years of outperformance of small caps.
And trust me, when it comes to small caps, hey, that would be fantastic, right? I don't care if it's half that. As a matter of fact, that would be really, really good. And, look at the chart, you would think it makes sense because what does the Wall Street love to do? Loves to rotate into the, the areas that are undervalued, right, versus the areas that are really super expensive. The real problem is just, it's different in how the market is. Everybody's still piling into the Mag 7, right? That's these 7 stocks again are becoming the headlines. But, the drop, everybody expects a drop in the first quarter. And you get what? Usually about, on average, every year, 10% drop. And so if it dropped another 7 from here, that would be what, 10%, right? So, we'll see. I'm seeing that call more and more about get to all-time highs and then sell it down, which would make more sense. I don't mean it's going to happen because you can see, today it was just nothing but a total sector, no matter what it was. I was really surprised about the stocks, for example, because AMD was actually green, NVIDIA tried to go green. But, everything was just red, and it's just a total all-out red day. Even the recovery, I think some sectors might have eked out to be flat, right, in the last 10 minutes there. Again, though, this is not a fear channel, so that's why I'm saying this. Where are we at? Keeping it simple. Between 47, 4,800, still there, been there for a month now, right, in this 2% range. And again, now in 47, if it breaks, if they continue the sell-off and that 4,700, and it's actually like 4,672 or something to be exact. But, when you come down here, we go to the weekly, that weekly fair value gap right there, and with that important level, which is the July level, that's what will come into play, right? And that's only 2.5% away. That's nothing. Okay, we were down over, 1% today at some point in time, I believe it was. So before the recovery. And of course, with all the earnings that are going to be coming out next week and the next couple of weeks with the Mag 7, that's really going to be the key because if they hold up, especially the earnings stuff, and they rally, it's going to be really hard to press the S&P down, just like it's hard to get to all-time highs without them, right? Now, Tesla, of course, what happens? More selling taking place, more momentum lost. And what was it? Again, here's the news with more price cuts over in Europe and France and everywhere else. Cutting prices up to like 8%. So it's a big cut right there. Market doesn't like it because that squeezes margins again. And what do you see? The gap down. But again, the prior days and low holds. All right. Buyers stepped in again around that 212-ish area right there. Held it up, and it basically did nothing. It just went sideways all day long. And, you know, when you pull out on this one, it's very key. If this continues to sell off, keep in mind, that's when it's going to bring in that 205, 208 area right in there. So keep that level in mind. Again, if it starts to move back up, that ascending trend line will now become resistance and stuff. It's going to have just a boatload of resistance above it if it tries to move up. And don't forget, they have earnings next week. So you could see it stay in a very tight range before earnings. And it's not like Elon's known to be some motivational speaker on these calls. So that'll be an interesting one for sure. Now, PayPal, this one actually was all over the place. It did go green for the day. I always watch these stocks that go green and why they went green. The biggest reason it went green because you have the 50, the 100 moving average. You have that anchor VWAP from that low over there. You have a support area right here. And so it's holding on to that because if it loses the 50 and the 100, obviously, and that anchor VWAP, well, you're going to have a lot more hurt to expect. And again, the 200 right above the other trend line is going to be a beast at 62 if it can get there. But this isn't just PayPal. Remember, these move as a group. And so this is the Global X FinTech ETF, which has all of them. SoFi, Square, and you name it, it's in there. And it's been going down. All of them have been going down at the same time. They move in a herd, right? And when we pull out, you can see it's at a support level here. But if that drops, you got a big volume gap right there. So you can see this whole group just continue to sink and everything if the market continues to sell off. And obviously this being monthly OPEX, huge OPEX, we'll have to see what they're going to do with it. And it doesn't seem very bullish right now, that is for sure. Palantir is another one after that rejection off that trend line, still going down, still got the rest of that RTH gap down there below with the 200 waiting on it in that 15 to 1575 range. No kind of momentum in this one whatsoever, no matter what news comes out. Again, got to get above that zero line on the MACD. That's when you see this one have its best days, when it drops below and then pops back above. Again, don't see any momentum. See plenty of news coming out about it, but no buyers taking place at this point in time. And it will have a boatload of resistance above it when it does. Now, Chinese stocks hit the skids again. One, because all the economic data that came out of there. Housing prices dropped once again. GDP came in below what expectations were. And then retail sales were not even close. Okay. And so unemployment rates of 5.1. Didn't even see a forecast for it. Don't even know what the normal is. Prior was 5. So it is ticking up. Again, though, what's one reason for this? Because big money over here and around the world is going long Mag 7, like we talked about. They're even more. This gives the last like 4 months here. Now they're even more long on the Magnificent 7, and they're more short on Chinese equities. So they're shorting these stocks. You can't blame them for crying out loud. I'll be doing a whole video for members on this right here, including that, and showing them why this is happening. Now, when it comes to earnings, you will have Taiwan Semiconductors in the morning. We'll see about demand. Everybody expects this to be good. Again, just a boatload of regional banks, which continue to sell off right now. PP&G, you have some others over there. And then economic news, you will come out with the building information coming out, building permits, housing starts. People are going to pay attention to that. Initial jobless claims, continuous jobless claims. And then you'll have data coming out of Philly, right, with new orders and the manufacturing stuff. People will pay attention to that more than they will to New York, even though it was horrible. And all of that will come out pre-market, so we'll have a very good idea of pretty much where we're heading and stuff. Obviously, you know, certain key levels got broke today. They tried to hold. And so, you know, again, just step back because you got to get through this OPEX first, right? OPEX official will be Friday, but now we're in VIX-piration. I think I showed you like the last 13 times or something. It was like 11 out of the last 13 were red. Maybe you had some downside in the next couple of days, whatever. Now, is the market due for some kind of bounce? Probably. It would make sense. I was looking at the IWM where it's sitting right now for a pop back up. Looking to see where the Qs and S&P kind of ended. So you can see that. But again, it's going to be a lot of tomfoolery, a lot of things to do with the options market. That's really what this is all about. And so we'll get a much better idea of next week where we're actually heading, because it's going to be all about earnings, right? Until it's not. And so, and I'll show you something talking about the earnings expectations. I mean, they're, again, I don't even have my bar over here, so I used to drop on the floor, but that's where they are, and I'll show it to you tomorrow to prove that. So anyway, hope you guys got something out of it. Hit that like and subscribe button if you did. I always appreciate all you guys who watch and share the videos, and I will see you tomorrow for another volatile day. Have a good one, guys.